1.3, prepare the statement of comprehensive income for the financial year ended 28 February 2021 for 43 marks. So we are now focusing strictly on this income statement. But remember, there are some amounts that we have calculated which have already been transferred to the income statement, and there are also other amounts which had already been entered in the income statement in the answer sheet which were provided. So let us then complete this income statement. Let's do it following the order of the transactions here. Right? The business, let's go to transaction because we have dealt with transaction A and transaction A, which deals with the fixed assets. So we are now proceeding to transaction B, which is on page 5. The business maintains a markup of 120% on the cost. Note that trade discount of 648,000 were granted to special customers. That is transaction B. Right? The business maintains a markup of 120%. So this will help us to calculate our sales amount. The cost of sales has already been provided, which is 6,966,000. So we want to calculate the sales amount. So our cost of sales is 6,966,000. 6,966,000 multiplied by 220 over 100. 220 over 100. This should give us, let's do this calculation. If the markup percentage is 120, then because if it was 20%, then it will be 120 over 100. If it was 30%, 130. Now it is 120, so therefore it will be 220 over 100. So 6,966,000. 6,966,000 multiplied by 220 over 100. 6,966,000 multiplied by 220 over 100. That is 15,325,200. 15,325,200 minus, remember the transaction told us that there were some special customers who were given discounts. So minus 648,000 discounts. Minus 648,000. Minus 648,000. 14,677,200. 14,677,200. This is our sales. The markup percentage is 120. So therefore, we take our cost price multiplied by 220. If the markup percentage was 20%, it would have been 120. 60%, it would have been 160. But now it is 120. Therefore, it is going to be 220 over 100. Then minus the discounts that were granted to special customers. And therefore, the total sales will then be 14,677,200. 14,677,200. 14,677,200 minus cost of sales of 6,966,000 of 6,966,000. 14,677,200 minus cost of sales of 6,966,000. Then the gross profit is 7,711,200. 14,677,200, which is sales, minus cost of sales of 6,966,000 will give you gross profit of 7,711,200. Then gross profit. Then we come to gross profit. That's gross profit of 7,711,200. Other income, we are already having the profit on sale of an asset here of 6,080. Let's proceed with the transactions here. We are now proceeding with transaction number C. Transaction number C, it says account of a debtor B Melter 800 must be written off. The account of a debtor must be written off. This will go to bad debts. This will go to bad debts. The bad debts, according to the information A, it is 19,200. Bad debt is 19,200. And we are writing off the account of a debtor. It is 800 rands here. So this is 19,200. Our bad debts are increasing. But remember, as our bad debts are increasing, our debtors control will decrease. This transaction affects two accounts. It is minus debtors control and plus. So we need to note with your lead pencil there, next to debtors control. Next to debtors control, that those debtors control will have to decrease by 800. But here in the income statement, what is affected is bad debts, which will then increase by 800. 19,200 plus 800, that will give us 20,000. That will give us 20,000. Provision for bad debts must be adjusted to 5% of the outstanding debtors. Yeah, I told you that we need to adjust the debtors. The debtors control is 123. The amount given for debtors control is 123,000 minus the ones that we have just written off. Right, so that's 123 minus 123,000 minus 800. Minus 800. That is giving us 122,200. 122,200. Then we want to multiply this. 122,200, we want to multiply this by 5%. By 5%, which is giving us, multiplied by 5%, this is giving us 6,110. So our provision for bad debts is supposed to be 6,110. So let's look at the current provision for bad debts. The current provision for bad debts at the beginning. The provision for bad debts at the beginning was 7,030. It was 7,030. So therefore the adjustment, it's clear that the adjustment, if the provision for bad debts at the end is 6,110, provision for bad debts, you can either be decreasing it or increasing it. So if you are increasing provision for bad debts, the adjustment is an expense. But if you are decreasing provision for bad debts, the adjustment then becomes an income. And in this case, we are decreasing provision for bad debts from 7,030 to 6,110. So therefore, provision for bad debts adjustment. Provision for bad debts adjustment. Provision for bad debts adjustment, we are reducing it from 7,030 to 6,110, which becomes an income to us. Decreasing provision for bad debts is an income, the adjustment is an income, but increasing the adjustment is an expense. Minus 6,110. That's 920. The adjustment is 920, which is an income to us. 920. Right. Transaction E. We have already done transaction E, which was based on the trading stock, and that is where we calculated the trading stock deficit. So then we are proceeding to transaction F. Transaction F. It says 30% of the audit fees is still outstanding. 30% of the audit fees is still outstanding, which then tells us that the audit fees that we are given there of 91,000 is 70% if 30% is still outstanding. 30% of the audit fees is still outstanding. So it means the audit fees that were paid, which is 91,000, audit fees, that's an expense. The audit fees that were paid, which is 91,000, is only 70%. Because we are told here that 30% is still outstanding. So now we don't want 70%, we want 100%. So it is therefore important that we multiply by the percentage of what we want and divide by the percentage of the amount given. So it will be 91,000 multiplied by, we want 100% of the audit fees, not 70%. So multiplied by the percentage of what we want, which is 100, and divide by the percentage of the amount given. The amount given, which is 91,000, is 70%. So it will be 91,000 multiplied by 100 divided by 70. 91,000 multiplied by 100. 91,000 multiplied by 100 divided by 70. This is 130,000. Let me check. That's 91,000 audit fees. Right. Audit fees is 91,000. And then 30% is still, oh yes, we are correct. 91,000 multiplied by 100 divided by 70. That is given. So it's 130,000. So the correct amount is 130,000. 100% of the audit fees. So the correct amount is 130,000. Because we were told that there is 30% of audit fees that is still outstanding, which then suggests to us that the amount that was paid is only 70%. Right. The monthly rent income, that is transaction G. The monthly rent income did not change during the year. During February 2021, the tenant paid 9,000 for repairs to the premises and deducted this from his rent. Repairs are the responsibility of the company, and this was not recorded. The rent for March 2021 was received in advance. Right. The tenant, so this is rent. Rent income. We want to work with the full amounts. So we are told that rent here, the amount given for rent is 173,000. Amount given for rent is 173,000. 173,000 is given, and we are told that there is 9,000 that was deducted. There is 9,000 that was not paid. Because it is said here, during February, the tenant paid 9,000 for repairs and deducted this from his rent. So this is not the full amount. We need to add this 9,000. And remember, this 9,000 was for repairs. And the repairs are the responsibility of the business. So let's go and check repairs. Repairs. How much is given here for the repairs? The amount given here for repairs is 476,000. So the amount for repairs is 476,000. So it will be 476,000 plus this 9,000. 400, let's check, make sure that we are taking the correct amount. Very important to be accurate in accounting. 476,000 plus 9,000, which will give us 485,000. 485,000. Right here, we have 173,000 plus 9,000. There is another story with regards to rent. There is another story with regards to rent. There is another story. So we have 173,000 plus 9,000. 173,000 plus 9,000. 173,000 plus 9,000, that is 182,000. That's the full amount for rent. But we are told that the rent for March 2021 was received in advance. So it means that this 182,000 now is for 13 months because our accounting period ends on the 28th of February. So we then need to divide this so that we find out how much is the monthly rent. 173,000. Okay, the monthly rent income did not change during year. During February 2021, the tenant paid 9,000 for repairs to the premises and deducted this from his rent for February 2021. Repairs are the responsibility of the company, and this was not recorded. The rent for March 2021 was received in advance. Yes. So you have your 173,000 plus 9,000 equals to 182 divided by 13. Divided by 13, so that's 14,000. So we need to subtract 1 month, which is 14,000. How did we get this 14,000? We took 173,000 plus 9,000, which gave us 182,000. That's the total rent for 13 months. And we divided by 13 to get the monthly rent. The monthly rent is 14,000. And we have to take it out, this monthly rent of 14,000, because it's for March. And our accounting period ends on the 28th of February 21. So let's calculate the total, the correct amount for rent now. We have 173,000 plus 9,000 minus 14,000. 173,000 plus 9,000 minus 14,000. It gives us 168,000. 168,000. Right. Adjustment number H. Adjustment number H. The company has 4 directors. The company has 4 directors earning the same fees. One director resigned on the 31st of May 2020. We need to write this information down because this transaction becomes a problem if we are not taking each and every sentence seriously. So the company has 4 directors. This company has got 4 directors, right? One director resigned, so minus this one. So we now have 3. One director resigned on the 31st of May 2020 and received his fees up to this date. He resigned on the 31st of May. 31st of May. So this one who resigned, our accounting period starts in March. It's March, April, May, March, April, May. So this director, there is one director who was only paid for 3 months in the current accounting period because he resigned in May. So that will be March, April, and May. This director who resigned, right? Right. One director resigned on the 31st of May and received his fees up to this date. Another director is still owed fees for January and February. So another director is still owes his fees for January and February. So it means this director has been paid for 10 months. This director has been paid for. The one who resigned was paid for 3 months. The one that we are owing has been paid for 10 months. And it means there is 2 directors who have been paid full amounts. 2 times 12 months. There is 2 times 12 equals to 24 months. There is 2 times 12 equals to 24 months. So let's calculate the number of payments that we have made. That is 10 plus 3 plus 10, 13 plus 24. That's 37. So the director's fees that we are having here, because we want to calculate the number of payments so that we are able to get the actual amount, that how much is each payment to the director, the monthly payment to the director's fees. So let's go to the director's fees. Director's fees. Director's fees is 3,330,000. 3,330,000. Director's fees is 3,330,000. That is our director's fees. And this 3,330,000 is equivalent to 37 payments. So if we can divide this by 37 payments, we are getting to know that the director's fee per month is 90,000. We want to calculate the director's fee per month is 90,000. So director's fees we have 3,330,000. 3,330,000 plus we want to calculate the two payments that are owed to the director who is still there, who is owed for January and February. So if each payment is 90,000, so that tells us that two payments will be 180,000. So it will be 3,330,000. 3,330,000 plus 180,000. 3,330,000 plus 180,000, that is 3,510,000. 3,510,000. That's 3,500,000. That is the total director's fees. And then transaction I for advertising. Transaction I for advertising, it says advertising consists of a contract with a newspaper for the entire financial year. Payment are monthly. However, installments were paid for 11 months. Note, the monthly rate decreased by 240 from 1 November. The payments are 11 months, which means these payments ended in January, because they are 11 months. So there was also a decrease from 1 November. So that will be November, December, and January. Let's start by addressing this decrease thing. So you have your 240 multiplied by 3. That's November, December, and January. 240 multiplied by 3, 240 multiplied by 3, that's 720. The decrease is 720. The total decrease is 720. We want to add the decrease back so that we are able to divide the amount for advertising. The amount for advertising given is 25,680. 25,680, we cannot divide it by 11. The challenge is that if we want to divide, we can't divide it by 11 because it has not been the same from the beginning until the end. There was this decrease. So for us to be able to divide it by 11, we need to add the decrease back. That's the decrease of 720. It then gives us 26,400. It then gives us 26,400. So we then say 25,680 plus 720, which will give us 26,400. And then this 26,400 we divide it by 11. Divided by 11. Then we are getting 2,400 minus this 240, because it was 2,400 before it decreased. So it is 2,400 minus this 240. So it is now 2,160. This calculation is for advertising. This calculation is for advertising. We started by calculating the total decrease. We had to add the decrease back for us to be able to divide by 11, and we got 2,400 before decrease, and we take out the decrease, and then we have 2,120. We have 2,160. So advertising the amount given is 25,680. 25,680 plus 2,160 for 1 month. 25,680 plus 2,160. That equals to 27,840. 27,840. Right. The last one, the last transaction, it says the net profit after tax was accurately calculated at 1,054,000. This was given, it was given, and the income tax rate is 32%. Income tax rate is 32%. Income tax rate is 32%. Income tax is 32%. So we can just take this, the income tax rate, if it is 32%, this will then tell us that the net profit after tax, if the income tax rate is 32%, then it means the net profit after tax, is 68%. If income tax is 32, because the before tax is 100% minus tax 32, this one is 68. So we have this 1,054,000 multiplied by 32 over 68. You multiply by the percentage of what you want and you divide by the percentage of the amount given. So you have your 1,054,000, 1,054,000 multiplied by 32 over 68. That's 496,000. 496,000. So you have got two options. If you like, you can take the 1,054,000 because we know this is 100%. Let's just use the same method to get the net profit before tax. 1,054,000 multiplied by 1,054,000 multiplied by 100 over 68. But it's not clear now. 100 over 168. So it's 1,054,000 multiplied by 100 over 68. 1,054,000 multiplied by 100 over 68. That's 1,550,000. But another option of getting this 1,550,000 was to just reverse by saying 1,054,000 plus, if you are reversing, this one is a negative amount, so it will be 1,054,000 plus 496,000 to get 1,550,000. The interest expense here, which is interest on loan, has a question mark, which then tells us that the interest expense was going to be a balancing figure. So let us now finalize everything here. We are now closing off the income statement. We are approaching the end of our lesson. We are now closing off this income statement. Let's start with the total for other incomes. Total for other income. We have 6,080 plus 920. 6,080 plus 920 plus 168,000. Plus 168,000. We have 175,000. 175,000. And then we say gross profit plus other income. That 175,000 must be added to a gross profit. That's plus 7,711,200. 7,711,200. That gives us gross profit of 7,886,200. I think this section of now closing it off, most students are familiar with it. Let's give us 7,886,200. And then you have your operating expenses. That's gross operating profit. Gross operating profit. Oh, I had two columns for operating expenses. Let me delete one column. I had 2 columns for operating expenses. Yeah. Let me just delete 1 column. Yeah, because we just have 1 operating expense. We can't have 2. So we have operating expenses. Right. Let's add all our operating expenses up to sundry expenses. These are all our operating expenses. These are all our operating expenses. Let's start by coming up with the total for depreciation there. 88,749 plus 31,281. 281 equals to 120,030. Right. Okay. Right, let's have the total operating expenses. 1,468,000. Salaries and wages, let's verify. 468,120. 1,468,120 plus 120 or 30, 120,030 plus 72,900 plus 20,000 plus 130,000 plus 485,000 plus 3,510,000, 3,510,000 plus 27,840, 27,840. This equals to 5,833,000, 5,833,890. 5,833,800, and this should be in brackets. So it will be now, this will now 7,886,200 minus 5,833,890. 7,886,200. 2,052,310, which is our operating profit. 2,052,310. 7,886,200 minus 5,833,890. This gives us 2,052,310. Right, and then you have our interest income here. We have our interest income. We are now approaching the end of our income statement. We are just closing it off. Our interest income is 25,000. It's given in the question paper, it's 25,000. So 2,052,310 plus 25,000. It's 2,077,310. 2,077,310. And then minus the net profit before tax to get the interest expense, minus 1,550,000. So it's 2,077,310 minus 1,550,000. 527,310, and this is our balancing figure. $527,310. That is our balancing figure, and we want to ensure that we do the right thing. We must make sure that when you are doing the income statement, your calculations must be correct. Your adjustments must be correct. and you must make sure that when you are using the calculator, you punch the correct figures, and even your workings must be shown, because sometimes it may happen that your workings are incorrect, but by following the right method, you are able to get at least a part mark there. But this is what needs to be emphasized here with regards to the income statement, the financial statement, is that you need to practice it almost every day so that you are able to do it. And make sure that you do as many activities as possible so that you may pass this accounting. So now that we have completed question 1, so it then tells us that we have finished this paper, which is November 2022, Accounting NSC paper 1, which had 4 questions. So we did question 3, question 4, question 2, and we are now on question 1. Our next lesson will then be based on November 2022, and it will be based in paper 2. We'll be doing paper 2. Thank you very much.